Bitcoin is in a pretty sharp correction as we speak. And in today's video, I really want to give people a bit of caution and especially calmness, because we have been calling for potentially Bitcoin having this fake out when it broke above the 65 to 66K resistance. And I told people, even though this is showing a new uptrend on Bitcoin, just be aware of the first breakout, as too many people flood in all at the same time. However, just because now we have this correction doesn't mean that the new uptrend has finished. So in my opinion, there is nothing to worry about over the long term, as we are still trading above the bull market support level, which we'll show you today. So in this live stream, we'll cover the Bitcoin bull market support band, what needs to hold, so essentially the bottom line in my mind, in order for the uptrend to continue. And number two, we'll cover the price targets that I am expecting Bitcoin to have a bounce from on both the weekly time frame and on the daily time frame. And lastly, I'll show you how the altcoin sectors are doing based on different categories, the 5 categories that I have in my portfolio. And I'll show you just a few altcoins that I think are at a very good entry target now that we have mentioned before, but now finally are at good entries again. So if you're new here to the channel, welcome. My name is Dennis. I'm a crypto angel investor for the past 6 years, and I have invested in over 100 crypto companies. On this channel, I share views on market trends and investing strategy to build wealth in crypto. And if you have any questions, please leave them down in the comments and in the chat, and we will do a Q&A towards the very end. Okay, so right away, I just want to show you guys that yesterday, during the beginning stages of this so-called crash, correction, whatever you want to call it, we have been monitoring this in our community called The Coiners, which you can join in with the first link in my bio, thecoiners.io. So ever since last week, I have already covered that we would be expecting a Bitcoin correction. And if there is, these are my target areas to buy on Bitcoin, which were specifically around right here, this sweep of this liquidity at 62.5K and the sweep of this liquidity lower between 58.8 and 60. So these are the levels, and not only myself, but another good analyst of our community, John, he has also been monitoring these two exact levels and how they match up with Bitcoin's higher highs and higher lows and the long-term exponential moving average, which usually acts as the bull market support. So let me show you that really quick on the charts. Here we have Bitcoin. So couple things to note here. Number one is that the most important bull/bear market support and resistance levels is the 200-day EMA or the 21-week EMA. Now, some people use the exponential moving average or the SMA, simple moving average SMA. If you like that, you can also go to the indicators and type in support band, bull market support band. And this, you can just go ahead and favorite this and add this in. What this gives you is a support band, as you can see. But remember, this support band only applies to the weekly time frame. So you want to make sure that you're on the weekly time frame, and this adjusts down. And you see basically right here, we are, the bull market support is, I would say more towards this bottom of this range, because I like to use the exponential moving average because it reacts to market price much more quickly. But nonetheless, the weekly support band is between 61,000 and 62,500. Now, a lot of people are looking at this now and saying, oh, look, like we have broken below the support band. We are like the bull market has ended. That's not the case, because remember, this is a weekly signal, which means when you look at these, this support band, you have to compare it with weekly candles, because each time that the this signal updates, it has to be 1 week after, right? 1 week of market price has happened, and thus the signal gets updated. So that means we have to wait for at least this current candle to close. And ideally, in my mind, I like to wait for 2 candle closes, because you can always have like a large wick, like in these scenarios, and then the second wick just comes back up again. So that's why currently on the weekly time frame, it's actually kind of a mixed signal. You cannot say we have broken below the weekly support band, because this candle on the weekly right now is only started 2 days ago on September 30th. So we have to wait for at least another 5 days for this weekly candle to close. And for all we know, if we finish the week, let's say by Sunday, we are back above 63K, then this candle will look much more bullish, and it will see kind of a wick into the support band, but closing above it. That will be very bullish. And something else that could happen is maybe it closes halfway here, wick into the support band, and then next week it wicks back up. Something like this kind of a formation that also works as a test of the support band, but holding above it. So that's why first thing to note is the weekly long-term support has not been broken yet. We have to wait at least 5 days. Ideally, I would like to wait for 12 days. So for the next 2 weekly candle closes. Next, the more direct signal to follow right now is the daily bull market support. And that comes at the 200-day exponential moving average. Now this, you can say, like, you can try to use the EMA or the SMA. It will be very similar. So both of these levels match up right around $60,000. This is on the daily time frame. And you'll notice I have this box drawn on the chart as well. So this, in my mind, is a very significant pivot level where there has been a lot of trading activity for the past 6 months. So I'll just draw those out on the chart. You have down here in March, right? This level acted as support 4 times. Here acted as support once. And here it broke below it, but quickly came above it. And you see there's a little bit of intraday resistance here at this level. And here, a lot of consolidation, some more consolidation. And especially when you have this kind of a candle, this three candle chart pattern is a very significant candle like combination pattern. I don't know what you actually call this, but if you just Google 3 candle patterns, you'll see that this is actually one of the most common things that you can try to recognize, like this, the 3 method formations. So you can go ahead and Google this 3 method formation and you'll see what I mean. So these consolidations, these 3 candles usually act as a very significant, what some people call pivot, some people call order book. But essentially there's a lot of trading activity here, and we should see Bitcoin react within these 3 candles. So combine that with the fact that the 200-day EMA is right around the middle of this range at 59K, 59.9. That's why I have this kind of blue range drawn out here. This is kind of my bottom line. And this is where I would like to buy Bitcoin and buy most altcoins, because most altcoins depend on Bitcoin. And that's why in today's video, you see the title, starting to buy the dips. I think the opportunity to buy is right around this range if we are to see Bitcoin continue to have strength. Now, you might ask, okay, like if we're buying already at this kind of key support, then what if it breaks, right? What's kind of our bottom line here after that? So my current trade setup is like this. So first, we have to know what the market is trending towards. Now, for the past 6 months, since March, since we have had this high, we have had consistent downtrend up until about here. So you can see that because Bitcoin has continued to make lower highs like this and then lower lows. And I know like everyone uses the same methodology now, but if you have been following me, you know, I've been doing this for the past like 4 years in this method. So while Bitcoin was doing this, at least until here, this was all a downtrend. So in a downtrend, you want to follow the trend, you don't want to fight the trend. And that's why staying very heavily long was just not a good idea. Until we have had these two moves right here and right here. So this first one, some people argue that this is starting to be a higher low because this wick was above the previous wick. But then if you go to weekly time frame, technically this weekly close was below the previous weekly close. So that's why this wasn't a 100% clear signal. Obviously, this here was already better than this one because the wick wasn't as extreme. So when you compare low by low, when you compare this low with this low, this was clearly lower than here, no matter how you look at it. The wick was lower, the close was lower. It's just more bearish on this drop. However, on this second drop that we had on September 7th, it was looking already kind of mixed. Market was potentially turning around. And you combine this signal with here, which was much, much clearer, in that the previous higher, lower high here at 64,200 right there, that has clearly been broken. No matter how you look at it, you can look at a daily time frame, candle close at 64,200. Well, you have candle closes here at 65,800. Or you can say that the wick was, 65K. Well, here we even have the close above the wick. So no matter how you look at it, this is a higher high. So when a market structure breaks, going from a downtrend into a uptrend, again, we need to see higher highs and higher lows. And if you're not familiar with this, I also encourage you to join our community on the Coiners. We have taught this exact same lesson of how to identify trends in this technical analysis trading course that you can access for free as long as you're a member. So we talked about, I go through this specifically, how you can recognize uptrends, downtrends, and why you need to follow these trends. But TLDR is that now finally we have had this higher low, higher high. So the new uptrend is starting. And what's important to understand, two concepts here. Number one, long term, the uptrend is here, which means prices will start to trend up. Now, it doesn't mean price shoots up. What trends up means is that markets will still behave in waves, like swing highs and swing lows. It always does this, right? If you've been in markets, if you follow any asset, it's always like this. Now, in an uptrend, the swing highs and swing lows will start to be higher than the previous, like this. And this is essentially what uptrend is. So knowing that gives you the full picture, because just as we have broken above this resistance here, this lower high at 64,000, it doesn't mean it cannot drop below this level. That's not what it means. What it simply means is that on a longer time frame, the next high we make should be higher than 65K. And the next low we make, wherever we bounce from over the next week or two, it should be higher than at least 53,000. That's what a uptrend tells us. And it doesn't mean, okay, uptrend starts and now like every resistance level flips into support and we are heading straight to all-time high. It doesn't work like that. So too many people jump the gun too early here because they don't understand how trends work. So that's why, I think it's really important that you have some basic education on this. Now, with that being said, what can we look at now? So I just said, okay, the next time we have a trend up, we should see higher than 65K. I'm pretty confident in that. However, if the next time that price has a low, we are expecting 53K, then that's not useful, is it? Because essentially what I'm saying is it can go this and it can go do this. Luckily for us, we do have this range. So this range, because it's significant enough with this pivot, with these levels that we have drawn before, and with this 200-day EMA, I am decently confident for us to see a bounce somewhere in here. I think if we don't see any bounce at all, and if we just kind of continue to do this, and especially if we get a daily close below 58K, and if we along with that, get a weekly close below 58K. Yeah, so by the end of this week, if we still don't see any sign of bounce at all, then that's not good, because that would tell me early signs that, okay, we expected an uptrend with higher highs and higher lows, but it's retracing way too quickly towards the previous low. Why would that be the case if a new uptrend is starting? So what I like to see on Bitcoin right now, and the reason why I'm starting to buy, is I think we should see something in this range. And if we get very close to these like mid 50s, like 56, 57, that will look very iffy. So I think here in this range, your risk to reward is already getting very good, because essentially what we're entering is 60K. And we just need to watch, like manually, albeit, something like 57. If we get a weekly or daily close below 59, let's say, below this close right here on daily, that will look quite iffy. And I will really reevaluate what happened here. Was this just a huge trap? If we get a close below here, that might be the case. But so far, I don't think that's likely. I think what's much more likely is that because we have this confirmed market structure break towards the upside in a new uptrend, chances are we should see a bounce. I think that's my assumption currently. So that's why, I'm really not worried. The levels are very clear to me. I enter here and I watch over the next 5 to 12 days, daily close, weekly close. If we close above 58, that would be all good. Like that's pretty fine, because in that case, like the chart will look just something like this, where we have another higher low above the previous higher low, and we already have a higher high. So next stage will be a new higher high above 66. Perfectly clear to me in that case. And that's my highest probability assumption right now. Not 100%. For all we know, this could drop, but I think this scenario is higher probability here. Okay, so with that out of the way, there are a few things to watch. So I think what's most important, aside from the chart right now, is the unemployment number. So if you guys don't know, I have covered this quite extensively on the channel. You can go ahead and watch our last live stream. So our last live stream, we covered why this could have been a fake out. And what I covered here was that a lot of people were calling for the recession and rate cuts always leading to a recession. This wasn't necessarily the case, because recessions can be delayed for as long as 1 to 2 years. And if we get that is typically what the Fed calls a soft landing. And in order for that to happen, there is now a very clear line in the sand, which is the unemployment number capping out at 4.4%. This is what Jerome Powell said at the September FOMC meeting. Now, this week, the biggest announcements come from jobs numbers. So I want to show you right here. This week, starting from October 1st, yesterday, Powell already gave a speech. Today, we have the ADP number. Not very useful. I've done a little bit of research into this. It's not that reliable. Tomorrow, we have the initial jobless claims. If this comes out very bad, could be early signal for what happens on Friday. But ultimately, the most important metric here is what happens on Friday. So Friday, we have the September jobs report and the unemployment rate. So this is the one number you need to watch, which is the previous unemployment rate is 4.2%. The consensus for this time, the unemployment rate in September is 4.3. If we get 4.2, amazing. That would be like very bullish. If we get 4.3, totally okay. If we get 4.4, it would look kind of bad, but it would still be okay, because remember, Powell said the cap that we need to hold below is in 4.4. So I want to show you, where is it? What did he say? This is on our last live stream right here. So the target for unemployment rate is 4.4 maximum. So as long as we're still below 4.4 is good. 4.4 not end of the world, but kind of bad. 4.3, okay. 4.2, very bullish. If it gets 4.5, oh man, that's going to be like very, very, very bad. And pretty much we got to sell everything. So let's see what happens on Friday. And this jobs report gets released every month. So you can go ahead and go to the US Bureau of Labor Statistics website. And here you have all the schedules. So we just have 3 more releases for this year. October 4th, November 1st, December 6th. And most importantly are these two, because these two are pre-election. The one after will be post-election. Okay, so watch this number. As long as this number is okay, and as long as Bitcoin price is okay, holding above this range, I think we're good. Okay, so with that out of the way, that's for Bitcoin. That's for overall market. I don't think the time to panic is now. I think there is an opportunity to buy the dip right now. So with that being said, what is there to buy? What is a good target to buy? Again, I want to refer you back to our channel. I have covered our portfolio update. In this latest portfolio update, I covered 5 sectors: AI, gaming, Memecoins, RWA, and layer 1s. Now, out of these 5 sectors, whatever you have bought and whatever I have bought in my portfolio, like those are all still up. I'm totally fine just holding them. But I'm talking about short term. Which sectors are bouncing the hardest and holding up the best and kind of the easiest to find dip buying targets? To do this, I want to draw your attention to a few tools here. So number one, we have this tool that I have shown yesterday as well in our members live stream in the Coiners. So this is a TradingView tool called Coins Screener. And there's one way I really like to use this, which is to go through all of the top coins, starting from top 500 to 0. Sorry, the other way around. Rank. You can filter by the coin ranks. So I only want to get the top coins, top 500. And then you see you have categories here. So what I like to do is I add a column for percentage performance 1 month. So because we know this past month has been seeing a rally overall, so we add this and then we sort by descending. This gives us the strongest performing altcoins over this past month. And then here you can see they're all ranked. And what I really like to see all the time is this categories. Out of how many of these, let's say top 30 best performers, what do you see the most? You see memes, layer 1s, gaming, I don't know what this is, memes, hex, layer 1, AI, meme, layer 1, meme, gaming, layer 1, AI, aerodrome is base, so layer 1, meme, FTX token, okay, whatever. Wormhole is technically layer 1 infra, memes, gaming, layer 1, gaming, layer 1 meme. So it's all kind of the same things. It's the things we have talked about. And right away out of this list, you notice, okay, these are the categories. And then what I like to do a step further is I go on CoinGecko, and CoinGecko has these categories. So here we have the AI category. So the AI category, I want to bring your attention to first because it's very easy to buy the dips on any AI coins. And I have told our community yesterday as well with kind of an early signal. So out of the top 10 in AI coins, all of them are still up this month. You see Near, Bittensor, ICP, Fetch, Render, the Graph, Akash, IODS, Arkham, like whatever. Okay. All of them are still up. They're still green, 30-day. And you just literally like you throw a dart at this chart and you're good. And what's even more interesting is that technically speaking, I don't even count the Graph or Arkham as AI, and Golem is a very old coin. And similarly, like you have like Origin Trail. Okay, Origin Trail, I guess it doesn't count. It shouldn't even be here. But you can scroll down even more and you see the Lithium is up, Pal AI is up, Xerox AI is up. So very easy to hit a winner in AI coins. You don't even need to be very sophisticated. So that's first sector that I like. I think it's very easy to recommend. Buy your favorite AI coins on dip, very easy. Similar, we can look at Memecoins. Can I go, maybe I can find something here. Meme category, no. Okay, I'm just gonna go to typical meme. And then you go down to find the meme category. Okay, and you see very similar. You have 30-day rank. And remember, you want to rank by the most established coins in this category, not by the actual performance. You want to see how high of a win rate can you get that you're hitting a winner. And in this case, again, very high winner percentage. You could have bought Doge, SHIB, Pepe, Whiff, Bonk, Floki, PopCap, Brett, Mog, Mew, Bohm, Nero. Like even like this Runes meme is up. Pepe Coin, Turbo Docs. Okay, just don't buy this one. So this is ton ecosystem memes. That's one ecosystem memes that I don't recommend. Everything else is good. So very high win rate here as well. So AI, meme coin, easy. You just buy the dip on your favorite ones. What's more tricky is gaming and layer ones. So first of all, we have gaming, and right away you see gaming here. Even some of the top ones are down. You have Sandbox down, Axie Infinity down, Notcoin is down. And you know, if you're not familiar, like Notcoin is really not a gaming coin, so that's probably why. Gala not up that much, like 7%. I don't recommend Gala as a pick for anyone. Ronin, even though it's popular, it's still kind of down. I'm kind of curious why. And also down here, if you scroll down, you see kind of still mixed bag here. And some of these guys don't even belong here. Like Scale shouldn't be here. Engine is very old. Hamster Combat is another meme coin. It's not a gaming coin. So if you're doing gaming coins, you got to know what you're doing. And I recommend you guys to check out my video, portfolio video, very simple. We picked, I believe, 5 gaming coins, either 4 or 5, that are actually outperforming the market and still working and fit this narrative the best. And I just want to tell you right now, it even shows more, because out of this list, our favorite coin, SuperVerse, performing very well. And I want to show you just a little bit of TA on Super as well. So you see down here, I'm going to compare this to a couple other gaming coin charts. But what's very interesting on Super is that since the bottom, this rally has not been retraced nearly as much as other coins. So when you consider, the bottoms in August, 40 cents, and then the bottoms in September, 60 cents, we are still at 97. So this is showing a lot of strength, and you cannot find similar charts in most gaming coins. If there's a way to compare like year-to-date performance, I don't think anyone else would stand a chance against Super. So on Super, this is giving us quite a good range to target soon. So I wouldn't recommend for us to be a very high R&R range right now, but I think we're getting close. So if we can get into this lower support range between 78, 79 cents to 92, this will be fantastic in my eyes, because this level, very long-term, that has been tested before. So February, April, May touch, and then broke down below it, resistance, touch here, flip it into support. And now we're kind of back in for that classic breakout retest. So you can also apply kind of a following the strength and needing the uptrend to continue. And in that case, you also have a very clear stop loss. So let's say we get a re-entry into this range, 78 to 92 cents, average price maybe like 85, 86. What I would do is I would just target this previous low here, 58 cents, as a higher low support that needs to hold. Because what we have had on Super is essentially like this, low, and then higher low. And you can call this head and shoulders, where you have the neckline breakout at 78 cents. So now, retest of the neckline, you enter, and then the last shoulder should be respected, and we shouldn't get below here. So you can have a stop loss right below here. And what's also interesting is if you bring up like VPVR, volume profile visible range. We also covered this indicator in the Coiners community, how to use this in our technical analysis course. But this tells us a similar picture. So if we look at year-to-date performance since December, you see this range right here. This is a very high volume node. And this black line, this is the point of control, the POC, or the fair market price that Super has traded the most in terms of volume at on average. And that's around 84. So if we can get an average entry here, that should be a fair price. And this high volume node, the bottom of this range should be holding, which is at 58. So 84 entry, 58 stop loss. Very clear setup in my eyes. And you want to get on strength, right? So what we don't want to do is some other comparable charts that I can bring you guys up to speed. Beam, for example, look at this. So it hasn't even gotten above the POC price, right? The POC is at 2.9 cents. We are at 1.6. And in fact, what you see here is that this high volume node, the fact that where there was a lot of trading volume before, is actually acting as a resistance now. And this is honestly not looking that good. So if I were to find an entry on a coin like this, and this is a similar chart that you'll find on many other gaming coins, and this is why the gaming sector is so noisy right now, you kind of have to wait until we get much closer to the summer lows, at least the September and August lows, before you can get like high R&R entry. Because if you enter now, the only stop loss level you have is like below the September low. So that's a little bit too far away. So you need to wait until you get much closer to these bottoms. But at that point, are you really betting on a outperformer, or are you better off just like going to another sector like AI and meme coin? So that's why, I don't see that many opportunities in gaming right now. Super, by far the strongest in terms of charts, in terms of holding this uptrend. Prime, another good example, also starting to break above the neckline. You see right here at $8, $9-ish, and starting to break above this kind of high volume node. But again, it's not above its previous POC level yet, the point of control. So it hasn't shown as strong of a rally just yet. But this is already getting quite good. You can find a similar setup on Prime, parallel Prime. If we get a dip like this, you can try to enter here. You can get a stop loss below this range at 5.8. So a little bit of a bigger gap, but still workable, let's say. Better than the chart of Beam. But I bring these charts up because honestly, these are still some of the strong ones. Most other gaming altcoins, especially individual games, just have not come back yet. And at this stage, I don't think it's smart to over diversify in gaming. There are only a few coins that are worth mentioning and actually showing strength. The last one I want to show you guys is XBorg. This is one that I have mentioned even before they launched and after they launched as well. They did a very bold launch where they unlocked 100% tokens for all investors, private and public. And now basically everyone sold and price is holding relatively stable. So this one, I have gave our community a early signal yesterday that I'm starting to buy in. And I'm targeting basically this previous low here at 63 as a short-term stop loss because this is only like 2 weeks away. But nonetheless, I think this should hold if we are continuing to go up. Because not only is this level showing the uptrend, but also XBorg has had their private sale investors all 100% unlocked. And these guys that sold, their investment price was somewhere between like 40 to 60 million, if I remember correctly. So that range is kind of like from here up until here. So basically, once it comes down into this range, you're getting very close to the private sale price for institutional, for VC investors. And if you can get that kind of entries, usually these levels are very significant. They'll show levels of strength, and prices should bounce if this is a good coin. So let's see. So this is one that I have mentioned in my portfolio video if you want a deeper dive on what they're doing as a project. But this is one of the only other small cap gaming coins that I think are worth holding. There are so many other gaming coins out there that have released in this past year, but just have too much token inflation coming up. Too many VC investors unlocking. I know exactly how that game works, but I invest in them, but I cannot recommend them as like public trade opportunities for your portfolios, because there are just way better coins out there that have no token inflation, like Super. Okay, last but not least, I want to give you guys a couple warning signs on the layer 1 infra side. So Sui, a lot of people have been getting into Sui, and I get it. Like it's very exciting. You feel a lot of FOMO, and Sui is pushing up towards all-time high, even though as the market is dumping. But just consider, like, you don't have to be on this train only. There are so many other layer 1s that are strong. Even Solana right now is a better buy than Sui. I think Solana will outperform Sui from this point. So let me just show you the chart right now. So if you remember how we have done the analysis on finding the entries and finding a stop loss at the previous higher low. Well, on Sui, the previous higher low is here. It's at 76 cents. So in order for me to get an entry and find a clear stop loss on Sui, no matter where I buy in all this range, I have to wait until price drops to as low as 72 cents for my trade to get invalidated. And that's just too much. Even if I enter in like 1.4, 1.5, 1.3, even 1.2, that is still too far away in my eyes. And I'm not interested in buying Sui from here until we can drop at least to the neckline breakout. So I would say kind of in this range between $1 to $1.10. So you see here again the classic breakout retest of this neckline. I'm going to draw out where this level is tested, and you can say that this is inverse head and shoulders, and then you have a stop loss below here. Am I saying Sui should drop here? No. With a strength like this, it's very hard to get this set up. It's very hard for Sui to drop all the way here, and then you buy, and then it comes back up. For all we know, like if it drops this low, something is wrong. It kind of shouldn't happen. But at the same time, how much further of an upside can you have with this? I just don't see Sui as a good coin to trade right now. I don't have it in my portfolio. I don't plan to trade it. Like there's so many better opportunities out there. So if you buy into that same category of layer 1s that are hyper performant, go back to Solana. Like, why not buy Solana? Look at the chart of Solana. There is a very, very strong support at 125 right here, the blue line. Test it 3, 4, 5, 6, 7 times and bounce from it. And before it was resistance. So we're pretty close to that. We are only, what is this? 12% away from this level. So you can start to accumulate Solana today and continue to accumulate until 125 and just set a stop loss, let's say even at like 100. That is still not that far away. Way better of a R&R setup than on Sui. And Solana is still like way more performant than Sui and have way more users. I don't know why you have to flood into this brand new coin just because it's going up a lot. It just doesn't make sense to me. So that's one I would recommend for people to pay attention to in terms of a kind of a alternative trade in the layer 1 narrative. You also have something catalyst driven, and that's Fantom. So Fantom, I also have in my portfolio that you can go ahead and check out in the video. But Fantom is a much better buy than Sui right now because you have essentially this neckline that is much closer. So I have drawn this already since yesterday on our live stream for our members. So you have this range, you have here, here, and here, and you have the same head and shoulders inverse setup. So if we can get a entry into Fantom in this range, let's say average at 58 to 60 cents, that'd be great because you can not only use this higher low here, but you can also even like use just here, depending on how good of a entry you get. And this is much better setup than Sui. And remember, Fantom, not only is it price going up, but also it's in the same category. A lot of people haven't caught on yet, but Fantom is releasing a new chain called Sonic. I'm gonna try to see if I can bring that up on Twitter here. Yeah, Sonic Labs, previous Fantom. This chain is not the same as the EVM chain for like the Fantom that we all know for 7 years. This is a hyper performant chain that is just as scalable as Solana. And they have a campaign running right now where they're not only converting the token from Fantom to S, but they're also doing an arcade for airdrops. So they're onboarding a lot of new users. And this is a catalyst driven trade as well, not only the narrative itself. So Fantom, way better bet right now than Sui, in my opinion. You can also look at Kaspa. Look at this parallel channel, right? Kaspa, every time that it revisited the bottom of this parallel channel, very significant bounce. And we're getting so close to it. This is so much better R&R, in my opinion, for a trade. So this is what I showed our member yesterday. And if you want the full trade setup, you should join our community. Link in my bio. And I'm going to keep updating this trade as well. And last but not least, in terms of infra, there is one other coin that I really want to draw people's attention to. And it's actually in the RWA sector. So in RWAs, you guys know I continue to hold 3 RWA coins: Mantra, Ondo, Pendo. These 3, very simple. There is one more that I've recently discovered that actually people haven't caught on yet, and that's Axelar. So Axelar, I have talked about before, right around its TGE time, because this was one of the biggest projects in the Cosmos ecosystem. They are a cross-chain bridge between Cosmos to EVM, to Solana, to other chains. However, they realized that the cross-chain DeFi sector is just not popular. So what they're now doing is that they are heavily rebranding and moving to a use case for RWAs. So you see here, way back last year, if you guys remember when Avalanche was doing these RWA experiments with the Singapore Monetary Authority and with Citibank, the main infrastructure provider, aside from Axelar as a chain, is actually Axelar. It wasn't Chainlink, it wasn't Layer 0, even though those guys say they're so good for RWA. It's actually Axelar. And more recently, again, they released this whole like institutional white paper alongside Citibank, Deutsche Bank, MasterCard, Northern Trust. I don't know who these guys are. Basically, they outlined how all institutions can tokenize assets using Axelar. And this is directly an RWA play. And nowadays, if you are deep in the RWA narrative, you'll know that there is this thing on the on Twitter. There's this thing called the RWA kind of alliance thing, RWA standard, and they have a RWA tokenized asset coalition. And on here, aside from chains, the main interoperability provider is Axelar. It's not like Chainlink, it's not Layer 0, it's Axelar. So these guys are really, they recognize that they have a narrative mismatch. They can't keep doing like cross-chain DeFi. They have to move into RWA and serve these institutions. And that's why Axelar has been doing a lot of push on this. They keep releasing these case studies with major banks. And they are about to release something that I don't know exactly what it is. But this like Renaissance thing releasing tomorrow, I have a suspicion that this is, again, going to be tokenization and RWA related. So Axelar is another coin that I am looking to build a position in, not only short-term for trading, but also as in my long-term portfolio in the RWA section. So I just want to show you guys the chart on this as well. Recently has been showing an uptick in price, but still quite undervalued. You see a lot of consolidation all throughout this range past 3 months. And you can basically try to find the floor around 47 cents. And you can say that this is inverse head and shoulders. Again, same pattern, but notice how close we are to this previous higher low. So right away, all of this range is very high risk to reward ratio for entry. So that's why Axelar is another one that I am looking to build a position in. And I haven't taken this trade yet, but I will be updating that in our community with the exact charts and trade setup and stop loss, take profit targets. Okay, and just so you guys know, like Axelar, look out for more announcements and coverage of them. So I did a lot of research into this project. All of their investors, their private sale investors, including like Coinbase and like I forgot what was it, like 816Z or whoever, a lot of these guys actually have all of their tokens finished vesting by the end of this year. So all of the inflation will finish starting 2025. Very strong tokenomics. You can find that on our on the circulating supply as well. You see 68% is already circulating. A lot more of that will come out until the end of this year. And then afterwards, it's basically only team tokens for community. And then the private sale price and the they did a coinless sale as well. So the coinless sale price was actually $1. So we are now actually below the launch price, which is just showing us like how much of an upside there is for this. And remember, this is like 2 years ago when they did this sale. So very good tokenomics. Honestly, long-term quite undervalued. Narrative finally picking back up because they're moving towards RWA. So definitely watch out for this one. I'm pretty bullish on Axelar now. Just the last takeaway, just be cautious, but at the same time, don't panic. Bitcoin is still fine. Like we just need to hold above the 200-day EMA and above that order book block at 58.5 to 60.5K. As long as we're above here in the next 5 to 12 days, daily close above, weekly close above, then nothing to worry about. It's just a natural correction in the new uptrend. So that's why I think you really should be focusing on buying the dips. Am I saying this is for sure the 100% chance that this dip buy will be correct? No, that's not the case. But a lot of these altcoins are getting very close to the stop loss. So we have a clear trade setup. And in case Bitcoin does drop much lower, we're not going to lose much more. So that's why I say it's a good idea. I think it's the right idea to buy the dip here. But I'm not saying 100% chance Bitcoin should bounce from here. So make that distinction and understand the analysis we have gone through today. I think that's the best way you can stay calm and navigate this market for the next 2 weeks until we come out one way or another. Okay, that's it. So a couple of things you should follow me on if you want more content. Number one is follow me on Twitter or X at virtualbacon0x. This is where I drop all of my quick alpha before I make them into live streams and videos. And number two, join our community. Go to thecoiners.io, sign up to our free membership where we will have trade setups, not only from myself, but from our analysts. We have daily market updates. As, for example, this Friday, we're going to watch the unemployment number. And if it's very bullish, neutral, or very bearish, we'll alert our audience right away, our members. And anytime if Bitcoin price drops below that key level and closes below it, I'm going to send alerts as well. We also have chats. We have member trades. We have courses. I have published over 5 hours of courses that you can go ahead and check out. And we'll keep expanding our membership. So sign up. I'll see you in the community. That's it. Thank you guys for watching, and I'll see you on the next video and next live stream.